This is Module 7 of Accounting 3110, and in today's module we will be considering that the traditional use of a single predetermined overhead rate like we worked on in Module 6 may not appropriately assign overhead cost in certain types of operations or businesses. We will actually be looking at what is called an activity-based costing system in this module, and we will be able to see how for certain types of businesses an ABC system may work a lot better than using a single predetermined overhead rate. But for now, let's go back to the prior module where we learned about this, what we will call a traditional system. This is the normal costing system where we use actual direct materials and actual direct labor, but we do what we call apply overhead by first developing a predetermined overhead rate and then using that rate in each period as actual information becomes available. Let's look at Module 6 for practice and review this normal costing system with the predetermined overhead rate. The first question asks you, if you are developing this predetermined overhead rate, what two estimates must be made before the start of the new year? We must estimate total overhead costs for the upcoming year. And so we will get a total dollar amount of overhead costs that we expect to incur in the next year. And we must also estimate the activity level of the selected cost driver. In other words, if we're going to develop a predetermined overhead rate for a company that is very labor intensive, then the selected cost driver might likely be direct labor hours. If it's a highly mechanized production operation, then we would probably use something like machine hours for the cost driver. But what we're doing here is we're estimating how many direct labor hours or how many machine hours do we expect in the upcoming year. So total dollars for overhead and, for example, total number of machine hours we expect in the upcoming year. So in this particular example we're going to use direct labor hours as the cost driver. So the information says we estimate $1,500,000 of overhead cost, and the direct labor hours we estimate are 60,000. And keep in mind, both of these numbers are simply estimates, and we are in time before the beginning of the year making these estimates. So this gives us $25 of overhead per direct labor hour. This is called the predetermined rate. Now, as each month passes, we have to keep records of how many direct labor hours were actually used during that month. We will take the rate in number 3, the $25 of overhead per direct labor hour. So the $25 will get multiplied by the actual direct labor hours in the month of January. And this happened to be 4,850 actual direct labor hours were used in that month, and this gives us applied overhead. This is the amount that will move to work in process along with materials and labor that is associated with the period. Now, the information in the problem says that actual overhead turned out to be 125,000. Let's draw that. The applied is always on the right and the actual is on the left. So we applied 121,250, but later it was determined that the actual overhead for the period was $125,000. So in this case, we have under applied, and the amount we have under applied is $4,750 under. So what that means is we did not send enough overhead dollars to cost of goods sold. It would have moved through work in process, finished goods to cost of goods sold. So if we want to find actual cost of goods sold for this period, we would have to add to the amount in the T account $4,750, which is the amount of under applied. So when you're under apply, you add. So let's leave that particular system behind now and move to a more sophisticated way to allocate overhead called activity-based costing. Companies that move toward this type of system are interested in developing a more accurate product cost. And specifically, they're interested in doing a better job of assigning overhead to the different products they make. So it is very important to understand that activity-based costing is really only about the one cost component, the overhead component, that nothing really changes in how we cost a product in terms of material or labor. Keep in mind, again, that overhead costs are a large component of product costs these days, and because these costs are all indirect, they have to be allocated to the product, and this is what we're working on here, is finding a better way to do that. Think about the old system or the traditional system where you just developed one rate. It may have been based on units of product, direct labor hours, or machine hours, but any of these would be considered volume-based. So the more units you made of a certain product or the more hours you spent on the machines for a particular product, then the more overhead would get allocated to that product. And what happens is when we make multiple products and all the products are unique in terms of how complex they are to make, what will happen is that this traditional system may actually assign the cost or the overhead cost to the products inappropriately. Let's talk about the big difference between just using one predetermined overhead rate and using activity-based costing. When we use activity-based costing, we're going to develop multiple rates. And instead of taking overhead and assigning it right to the products as we did in a traditional system, we're going to take overhead cost and try to relate those costs to certain activities that occur. And then we will go from activities to assigning to the product based on how much each product used those activities. There are two terms that are very important when we talk about activity-based costing, and that would be the terms variety and complexity. Variety refers to how many different products a company makes. So a company that makes multiple products would be have much more to gain from an activity-based costing system. Product complexity has to do with how difficult, how many steps, how complicated it is to make a product. When you make simple products and then when you make other products that are more complex, this diversity creates a real need for a system such as activity-based costing. Let's take, for example, a company that makes a main product and they make a whole lot of it and they're very good at making it. But they also make a product that we might call a specialty product. They don't make nearly as much of this product, but they end up incurring a lot of costs because of that particular product. For example, when we think of overhead costs in particular, a product that we're not as good at making because we don't make it as much would require perhaps more engineering work, more design work. We would certainly expect to have to inspect the product more. It may require additional setups on the machine, additional materials to handle. All of these costs that I'm talking about are those overhead costs. But think about it, if we're in the old system, it's not going to be this specialized product that's going to get assigned the majority of these overhead costs, because again, a traditional system with one cost driver is volume based. So whatever we make the most of is going to tend to get assigned most of the overhead cost. Now what happens in a situation like this is that we would see that our main product that we're very good at making, and we make a lot of it, it will get overcosted. That means we assign too much cost to it in a traditional system. On the other hand, the specialty product, we don't make much of it, so it doesn't get assigned a lot of cost in a traditional system, and it will tend to be undercosted. So a traditional system with one predetermined overhead rate may make both of these errors. It may overcost the main high volume product, and it may also undercost the specialty products. Let me demonstrate for you in a traditional system, and again, when we use this word, we're talking about with one predetermined overhead rate. We take overhead and we assign it directly to the products using a predetermined overhead rate. But in activity-based costing, we have a two-stage assignment. We're going to take overhead cost, and we're going to assign these to activities or track these to certain activities that occur in the organization, and then we will go to the next stage of assignment to the products themselves. So 2 stages from activities to then the products is very different than just assigning directly to products. This is where it gets its name, activity-based costing. Now let me give you an example. Here we have, we'll look on just the left-hand side, a traditional system. We have one big cost pool of $800,000. This is our total overhead cost. And in a traditional system, we would choose one cost driver, and this is how we would allocate the cost based on one cost pool, one cost driver, and you will get one predetermined rate. This could be X number of dollars per machine hour, X number of dollars per unit produced, and other possibilities. Now, in an activity-based costing system, what we're going to do is take this same $800,000, but we're going to look inside that cost pool and look at what's causing these various overhead costs. And we want to associate the cost with the different activities of this particular business. So some of the activities is we have to set up machines, we have to inspect, we have to handle the materials, and then we have another area of what we call facility cost, and these kind of, this particular cost pool would represent kind of the miscellaneous activities that don't really fall out into any other place, so kind of a catch-all for that. Now let's take these cost pools and we'll develop some rates here. Let's assume that the cost driver here is going to be units produced, and we're going to say that we're going to produce 50,000 units, and so our predetermined rate is $16 per unit produced. Now, what that means is, regardless of what type of product it is, every time we make a unit of product, we're going to assign $16 of overhead. So in this type of system, it doesn't matter if the product is difficult or easy to make. It's kind of a peanut butter approach. We're just going to spread these overhead costs among the products we make. And the way we're going to do it in this case is $16 for every unit we produce. Now in this ABC system, what we're going to do is we're going to look at the activity and we're going to say what causes these particular setups or inspections or material handling costs to increase? What drives these areas of cost or these activities? Well, setups would be the number of batches that we make, because every time we run a new batch, we have to set up the machine. So let's assume this company has 3 products, X, Y, and Z. And the total number of batches we expect would be 50 batches total. And so if we divide that out, we get what we call a rate of $50 of overhead cost per batch. Now let's look at inspections. What is the cost driver that makes inspection costs go up? It would be the number of inspections. Would be considered the cost driver. And let's say we expect a total of 300 inspections. And so that would give us a rate of $1,000 per inspection. Materials handling, let's say it's pounds of materials that have to be handled. And let's say that for all of our products, we're assuming 400,000 pounds total. So this is 50 cents of overhead per pound of material. And finally, the facility, again, this is a catch-all cost pool, and we're just going to use units produced as the cost driver. Again, this one is very difficult. Sometimes what you want to do actually is always minimize what you put in this circle if possible, because it is really a miscellaneous area of cost. And this would be $1 per unit produced. Okay, now what we would say about a traditional system is we have one cost pool, one rate. Under ABC, we have 4 cost pools, we have 4 cost drivers, and we have developed 4 rates. So the way we go about ABC is to look inside these costs and try to look for activities that are causing certain groups of cost. And we found 4 activities and ended up developing a rate for each activity. Now, what's going to happen is when we assign the cost to a product, remember we had 3 products, X, Y, and Z, and we're just going to look at one because they would all be done the same way. But when we look at product X, remember we had 4 areas of cost, or 4 cost pools, and a rate for each. I simply have to ask about product X and say how many actual batches were run of product X. And in this case, it was, just a second, it's going to be 10 batches at $5,000 per batch. And I'm going to need to go back here just for a minute, if you will correct yours as well. When we take $250,000 of setup cost divided by 50, we get $5,000 of overhead per batch. So if you'll please correct that. Okay, we have 10 batches of product X that are going to be made, and this is going to be a simple multiplication. When it comes to inspecting inspection cost, we have to find out how many inspections were done on product X. And our rate was 1,000, and we actually had 200. So this would be $200,000 of inspections. Now keep in mind, we were only expecting 300 inspections. We have 3 different products, and we were expecting 300 inspections, and yet in this one product, we're having to inspect 200 times. So tells us that this is likely a specialty product because we're having to do a lot of inspections. Material handling costs in terms of actual pounds for product X, 125,000 pounds at 50 cents gives us 62.5. And the facility level, we're actually producing only 10,000 units of product X, and that will be another $10,000. Now, also keep in mind, let's go back here, we were expecting 50,000 units to be produced. $50,000, 50,000 units. And look at product X. We're only making 10,000 out of the 50,000. So this is kind of a low volume product, again, a specialty product. All right, we have assigned the cost of each activity to product X. We get $322,500. And this is our ABC system. You would do the same for Y and Z. You would look at how many batches, how many inspections, how many pounds of material, and how many units produced. Multiply their actual level times these rates, and you could get their cost, their overhead cost that were assigned as well. Now, let's look at these two systems in the case of product X. You'll recall that in the traditional system, we were going to send $16 for every unit produced for product X, for product Y, and product Z. Didn't matter, $16 per unit. In the ABC system, we came up with the assigned overhead of $322,500. We were only producing 10,000 units. So this is the overhead cost under ABC. Now look at the difference. This is a specialty product. It's difficult to make, requires a lot of inspecting. We make a low volume, only 10,000 out of 50,000 units. The traditional system, undercosted this specialty product. The ABC system, although this is not a perfect or a perfectly accurate cost, it gave us a more accurate overhead assignment to this product because it was based on this product's use of the 4 activities that we used in the system. Once again, the traditional system undercosted, and this is a more accurate overhead cost for product X, and of course when we combine that with the material and the labor, we'll end up with a more accurate unit cost for this product. If you will look in your lecture notes, let's look at 2 or 3 of these symptoms of an outdated system. This would be a case where someone's using a traditional system with one predetermined rate, and the system is not working for us. Let's look at number 1. The outcome of bids is difficult to explain. That's because we have miscosted our products. And so we expect to go into the bidding situation and win the bid, but yet we lose, or vice versa. The number 5 is very, very common, where managers look at their profit margins and they just can't explain it. If we have 2 products and they are both miscosted, then what happens is we don't understand when the profits turn out like they do. And again, it's because when you have the wrong cost attached to the product, then you are computing the wrong margin on that product, and it all becomes very confusing. Number 9, some departments are using their own accounting system. That's because the information coming from the accounting system uses this oversimplified method of assigning overhead. And it is ending up creating some chaos and confusion. And people who really know that certain products are more difficult to make, they know that the cost that accounting has assigned to that product just doesn't look correct. So when we miscost, this is bad information for managers, and they may try to develop some of their own accounting since they can't really rely on the information that they're being given. Let's look at these true or false. Again, you can see these on the screen as we go through them. They're also in your lecture notes. Number 1, the conventional system of allocating overhead to products tends to overcost specialized products. No, that is incorrect. It's false. It tends to undercost the specialized product. Number 2, the main reason to adopt an ABC system is to reduce the total amount of overhead. This is not correct. This is false as well. The main reason is to develop a more accurate product cost, specifically a more accurate allocation of the overhead cost. And so once we start breaking up this big cost pool and trying to see what's inside, sometimes we are able to reduce the total amount of overhead because we see things we can perhaps eliminate. But that is not the main reason to adopt an ABC system. Number 3, as overhead costs are broken into additional cost pools, product costs should become more accurate, and that is absolutely true. Number 4, product complexity refers to how many different products a firm makes. That is not correct. That's a false statement. The word that would be appropriate here would be product variety. So number 4 is false. Number 5, ABC costing is appropriate in service industries, but it began in manufacturing. That is true. Number 6, all non-value-added activities should be eliminated. What they're saying is when we look in that cost pool, we will see some activities that really don't add any value. And it says all non-value-added activities should be eliminated. That statement is false because there are many non-value-added activities that are necessary, that there's no way we can get rid of all of those. Number 7, an activity-based system will enable a company to better understand its operations and processes. That is true. Number 8, the ABC approach applies to labor, materials, and overhead equally. False. ABC is solely about overhead. Number 9, an ABC system is costly to implement and utilize because of the level of detail. That is true, and that's why if a company is looking for an ABC system, they have to be ready to accept the fact that it will be costly and it does take a lot of time to implement and to use an ABC system. Number 10, conventional accounting systems are still appropriate for companies with very low product variety and complexity. That is true. So before a company moves toward ABC, they have to evaluate how many products do we make, and are these products different, very different in terms of how complex they are to make. If a company has very low variety and complexity in all these products, they're all equally easy to make, then ABC would not be appropriate. This concludes our module today on activity-based costing. Keep in mind that activity-based costing is just another way to assign overhead, but offers the potential to assign overhead cost more accurately. And this is done by first assigning cost to activities and then to the products.